Good afternoon, everyone. Jason here. Today is August 28th, and this is your aftermarket update. All right, we had a really nice day here at the Oil Trading Group. By contrast, the market here today so far, we still have an hour into the close, has moved 206 ticks on the day. Contrast that to Friday, where the market was only 52 ticks, low to high. So again, much more movement. The very fluid activity today, and of course we took one trade and we're done. And these are our favorite types of trading days. Let's talk about why we got into this trade that went 120 ticks today. It's a fairly simple, straightforward process here today. We have what we call our market maker levels, and that's the levels that you see here on your screen. So what we look for is this phrase, kick the signal, pay the target. And we have, when you turn on these revision signals, let me do that for a second. You turn on these revision signals, you can see right here at pit open, the market rallied up in here as high as 67. We look at a measurement between 7 a.m. and 8 a.m. and say that if the market gets to within a couple of ticks here of what will be the daily structure signal after the open, then you'd be looking for this market to get up into the next level, which at this point is the daily structure mid. And that's one of the things that we talk about with our way to play these levels. I'm going to turn these revisions off now, and we're going to talk about a confirming factor here today. So again, we got to within a couple of ticks of where that daily structure signal would form after the open. The market rallies up pretty aggressively into 67 and can't quite hit the structure mid up there at 71. We had this red line represents right here at 59, represents our sweet spot retracement. This is something that we look for every day, and this would happen. This is a 5-minute chart, but this sweet spot here is actually arrived at on a much higher time frame. We came up into this level, couldn't get above it, and couldn't stay above it rather, and almost immediately fell off again. We couldn't get into the daily structure mid. So you had some confirmation here. Also, with that sweet spot, we looked then to get short. This is a fairly quick bar here on the 5-minute chart. This is not a moving average. This is the valuated average price. And so as we came down into 52 here, this is where we were looking to get short. So a couple things going on. We came into our favorite sweet spot retracement. We did not even get 10 ticks above it. We couldn't make it to the structure mid and immediately dropped down underneath the valuated average price. And this is where we were looking to get short. Our entry was 52 and our stop was 12 ticks to 64. Once we got into this trade, we do this thing that we call kick the signal and pay the target. So we were looking here at 52 short up here at the top. We did get into this daily structure signal, rotated very quickly, and once we began this process of pushing down through it, we thought it was going to be just a matter of time before we hit our target down here at 46.93. Now, in retrospect, you could have held on for these bigger ideas, but it is Monday, and we were looking to get into this. So that was 60, actually got down here one tick below that, hit our target at 92. So that was a 60 tick trade times 2 lots, or 120 ticks, or a $1,200 trade on a Monday morning. So like I said, our market maker levels really did provide us with the opportunity here today. And again, it was a very nice and clean entry into this trade today. So again, marked here by the sweet spot of our retracement. We got underneath the VWAP, valuated average price. We came down, could not make it up to the structure mid on your market maker level, and then we took it all the way down here into this daily structure target at 93. We went one tick deeper at 92, and again, the market did continue to go, but at that point, 60 ticks times 2, or 120 ticks on one trade with 12 ticks of risk is a 5-to-1 risk reward, and that was a very nice trade. So enough talk. I'm going to let you watch this OTG trade of the day. So I'm going to cut it down like I always do, put it into, so I'll let you listen to the first part, let you listen to me get in, and then we'll cut it down into pieces, speed it up, and let you watch the rest of the trade in its entirety. So again, without further ado, here is that OTG trade of the day. I'm in at 52. It's 63 on the stop. 64 on the stop. 64 is the stop. Your target underneath is, well, it's down around that 21-ish area. All right, you can see that once we got through that 20 area, that was a previous, the morning low was around 23. The market really just spent a lot of time rotating there. After we finally made it through that break down through, there was a triple bottom there, or actually it was a quad bottom at around 42, 43. Made it down into those 20s, rotated there, and then all the way down into that 93 daily structure target area. So basically the market did as we expected it to do today, and it was, like I said, a really quick, nice one and done sort of trade. So again, as always, I want to say thank you for listening to the videos here and watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.